So Morphic was founded in 2012 and it was founded by Jack Lowenstein and myself. And the founding principle was we simply thought there was a better way to invest. And we think that out there is a number of unique ways and new and evolving things that can be used to help enhance investor returns. And underlying that is what we look for is change. So businesses which are changing and businesses that are able to change the world.
The first thing is we're very focused on a limited number of ideas we think will add long-term value for our investors. The second thing is we're very vigilant about identifying things that might go wrong so that when they do happen, we can be very agile in responding to them. And those, I think, are really the key drivers for how we've managed to deliver very good risk-adjusted returns as we've launched. And by that I mean that most investors who've invested with us have not only made good money over the nearly 5 years we've been operating, but also had a fairly smooth ride. There haven't been too many wild swings. And that is the thing that we think distinguishes us from most other funds managers in the market. Look, I think that there is hope. I mean, it's very important to focus on the fact that there's an amazing response from technology in solving some of the problems relating particularly to greenhouse gases. We're going to be focused on looking at opportunities in alternative energy, in the distribution of alternative energy, and also obviously in energy saving. And a lot of stuff is being done now to try and improve water quality and air quality.
There's some concern amongst investors that there's what's called greenwashing, which is a fund doesn't really change particularly what they're doing, and they're not true to label, for a phrase there. And one of the things I think about, and is quite unique about this fund, is that we are actually going to be very true to label. What I mean by that is we have these negative screens, so we're going to remove these stocks, and then on top of that we're going to have positive screens as well. So we're going to look for stocks to add value. And the last thing is we're going to look to short those businesses if we think these businesses are truly going toward down. Like so some of these coal stocks, if the world is actually going to use less coal and the divestment campaign is to really work, the value of this equity should be substantially lower.
We've been investing already in a lot of companies we think are very appropriate for the new fund. I suppose some of the standout examples are Alstom, which is one of the world's leading train manufacturers. They just pioneered the world's first hydrogen-powered train, which is operating on some routes in Germany. That's really about the cleanest energy you can get. We're also very focused on companies that are helping to improve access to alternative energy. And one of the best examples of that is actually in India, a company called Power Grid, which is pioneering the so-called green energy corridor, which is going to make it possible to take a lot of India's very rich endowment, particularly in solar, to the users who typically are several states away in more industrialized areas.